Thanks for watching Lessons in Minutes with Jaylee. Like, share, and don't forget to subscribe.
Today, we're going to tackle the CXC Principles of Accounts January 2024 Question 1 Response. The areas of focus are from the broad topic control system, and they are correction of errors and control accounts. Let's get into the question, and do remember to read your question first. Easton Lai is a trader. The trial balance prepared on December 31st, 2023 failed to agree. The difference was entered in a suspense account. Remember, once there are errors that affect your trial balance, meaning it hinders it from balancing, it means that you are to enter that difference in the temporary account called suspense account. And this account is used to aid you in correcting the errors. The following errors were later discovered, and there are 5 errors. You're asked to prepare the entries in Easton Lai's general journal at December 31st, 2023 to correct the errors. And note briefly, narratives are not required. Let's look at the errors. The first one reads, payment of $76 cash for utilities used for the year was entered in the cash book, but not in the utilities expense account. So what we're seeing is that utilities was paid for by the business and they would have used cash to make that payment. What are the 2 items affected by that transaction? Yes, once you pay the utilities, that's an increase in the expense and you're to debit. And the cash that is used to make that payment, which is a reduction in the asset, you are to credit. And it means that based on what we're seeing, the entry was placed in the cash book, but no entry was recorded in the utilities expense account. Now, to correct that error, we need to ensure that we place that entry in the utilities account. But based on this error, only 1 item is affected because half of the double entry was completed. We now need to put that debit entry in the utilities account to reflect that a payment was made for utilities. So we have to increase the utilities account. So we are going to make that entry in the utilities account. And do remember, we're asked with your journal entries. So the response to the journal, remember you have to enter your date and it is 2023, December 31st. Now the account to be debited as indicated is utilities because that's an increase in the utilities expense because once you pay the expense, that's an increase in the expense. But no record was placed in the utilities account. So therefore, we have to debit the account to show the effect on the utilities account. No, because only half of the double entry was affected by that error, we're going to use the suspense account to complete double entry. Oh, do remember to put in the amount, and the amount is $76. Now, in order to complete double entry, as indicated earlier, we're going to use the suspense account as that temporary account to aid in completing double entry because remember, once there's a debit, there must be a corresponding credit. And the amount as well is $76. So to correct the error, the utilities account is debited while your suspense account is credited. So let's move into the other part of the question. We're going to look at the next error, which is the purchase journal was overcast by $454. What do we mean by overcast? It means that the purchases account was entered with $454 too much. Now, in this case, it means that to correct the error, we have to get rid of the extra $454. But the question is, that big question is, what type of balance does the purchases account carries? And the purchases account carries a debit balance. So it means that this $454 was entered on the debit side too much. So the debit side is overcast, overstated by $454, meaning an extra $454 was entered on the debit side of your purchases account. And this is so because it was transferred from the purchases journal, because remember your purchases journal show your credit purchases. And if you have entered $454 extra in that purchases journal, it means that you're going to be posting that figure to your purchases account with that overstated amount, that overcast amount, that extra 454. We now need to get rid of that. How do we get rid of that error? We're going to be crediting the purchases account. And why do we credit the purchases account? We credit because we want to cancel out that extra 454 that was entered on the debit of your purchases account. And notice this error only indicates that it is within the purchases journal, that total that you transfer. So only half of the double entry there was affected. And in this case, it means that from we credit the purchases to aid in complete double entry, we're going to use the suspense account. And we're going to debit that temporary account suspense with that same $454. So let's make the entries in the general journal. And again, the account to be debited is the suspense account, and that is with the $454 extra that was placed on the debit side of your purchases. And we're crediting the purchases with the 454. Why? We need to get rid of the extra 454 that was placed on the debit. And remember, if it is that an account is overcast, you have to do the reversal of the entry to cancel out that extra that was placed in the account. Now, with that said, let's move into the next error. And that error is the total of discounts allowed, $6, was not included in the trial balance. So we're seeing where there was an omission of discounts allowed, and the transaction only states discount allowed. So we're seeing where only half the double entry was affected. So again, we know that suspense account will be used to aid in completing the double entry. And remember, the suspense account is a temporary account. Now, what are we going to do to correct this error? Are we going to debit discount allowed, or are we going to credit discount allowed? In this case, because discount allowed is an expense and it carries a debit balance, we are going to debit the discount allowed account. Why are we debiting? This amount was omitted from the discount allowed, so it therefore means that we're going to debit the discount allowed to show that increase in it. And to complete double entry, we're going to use the suspense account. So the entries are debit discount allowed with $60 and credit suspense with $60. All right, let's move into the next error. And that is $200 cash received from Marveline Adam, a trade receivable. And remember, our trade receivables are our debtors, was posted on the debit side of her account. Again, cash received from the debtor was entered on the debit side of the debtor's account. And this is only telling us that the error is within the debtor's account. So again, to complete double entry, we're going to be using the suspense account. But we need to know what should have been done in the account for Marveline, because remember, Marveline Adam is the debtor. Now, once the debtor make a payment, that's going to cause a reduction in the amount that the debtor is owing. Remember, debtors is from the category of assets. And if your asset decreases, you are to credit. But we are seeing where this $200 was placed on the debit of Marveline's account. And it means that that's a reversal of that entry that was made. Remember, if there's a reversal of the entry, you're going to put the entry on the correct side, but you have to double the amount. Why are we doubling? If we place $200 on the credit side, what that will do is just cancel the 200 that was placed on the debit. That is not reflecting that the person, that debtor, would have paid 200. So we need to double, and we're doubling this amount, which will be $400. Now, when you place that 400 on the credit, 200 from that 400 would cancel the 200 that was placed on the debit, and then we're going to end up with the actual 200 that we should have on the credit side. So remember, once there's a reversal of entry, to make the correction, you have to put the entry on the opposite side, on the correct side that it should have been placed on, but you have to double the amount. Again, only half of the double entry was not posted accurately. So to complete double entry, we are going to use the suspense account to aid in the correction. So let's move into making the entry in the general journal. And the entries are debit suspense with the 400, and we are going to credit Marvelyn Adam, which is a debtor, with $400. Again, remember, the debtor made a payment, but instead of showing that it's a payment with a credit entry, a debit entry was made, which is basically increasing the value of what the customer, the debtor, is owing. To get rid of that, you have to reverse the entry and you have to ensure that you double the amount. Don't forget, for reversal, you are to double the amount. Let's move into the final error, and that is drawings of 3,000 had been correctly entered in the cash book, but posted to the drawings account as $1,800. Now, once there is drawings, it means that that's an increase in the drawings, so you have to debit the account. We're seeing where only half of the entry was correct because it's saying that it was posted correctly to the cash book. So it means that the credit entry was done accurately. But for the debit entry that should be in the drawings account, we are seeing where instead of entering 3,000, there was only $1,800 that was entered. Once there is an error of original entry, you're going to end up with either entering too much or too little. If you enter too little, you have to place the difference. So we have to find difference between those two figures. You have to place the difference on the original side where the entry was made, meaning the side where the entry should have been made. In this case, we're seeing drawings of 3,000 and only 1,800 was recorded. So it means that it was short of $1,200. It was undercast by $1,200, 1,200. Remember, once there's an undercast, you place the entry on the side where the original entry was made. Again, drawings, once there's an increase in drawings, you are to debit. So it means that the debit side is short of $1,200. So we need to add $1,200 to the debit side. So to correct this error, our drawings account should be debited with 1,200. That's the amount that it is short of. So we're adding that to the debit side. And to complete double entry, we are going to use our temporary account suspense to complete that. So therefore means that our suspense account will be credited with the $1,200. So let's look at what that entry looks like for the correction. So the account to be debited is drawings with 1,200 and the suspense account is credited with 1,200. And that would take us to the end of correcting the 5 errors that were presented for that part of the question. Now let's move into the other part of the question. And this part of the question reads, before the errors were discovered, Eastonline calculated that he had made a profit of 17,800 for the year ended 31st of December 2023. And you're asked to complete the form provided below to show the effect of correcting each of these errors on the original profit for the year. If the error does not affect the calculated profit figure, you're simply asked to write no effect in the space provided. And an example was done for you. And once that example is done for you, it makes it easier for you to proceed in responding to the question because you get a little idea of what you are to do. Now, the form, basically the concept you're using is the statement of corrected profit concept where you show the correction in the profit. Now, based on the errors and the corrections that were made, if the item does not affect your profit calculation, meaning if the item is not used in the income statement to calculate your profits, it means that that will not have an effect on the profit. So therefore, you're not going to use that to adjust your profit. You're simply going to write no effect. But those that affect the profit, meaning those items that are used in calculating the net profit, you will have to show the effect whether there is an increase or there is a decrease in the amount. So let's take a look back at the correction that were made. So utilities, we're seeing where this is an expense and it should increase by $76. And we're seeing where it should increase. How do we know that there should be an increase? We indicated that in our correction that we should debit the utilities account. Now, once you're debiting the expense account, it means that there's an increase in the expense. Now, the question is, if you increase your expense, if you have more expenses to pay out, what effect does that have on your profit? The more expense you have, the less profit you're generating. So it therefore means that the increase in the expense of $76 will decrease your profit. That will decrease your profit by $76. And that is the first item that the examiners would have done for you and given to you as an example. So we're now going to look at the others. And let's get back to our response, the general journal, that is. Now we have purchases. And the purchases was overstated by the 454, meaning you would have entered too much. In this case, we're reducing the purchases. The less purchases you have, the more profits you will have. So it therefore means that this reduction that we're showing in the purchase account, how do we know that's a reduction? Once you credit purchases, you're decreasing the purchases. The less purchases you have, it means that you're going to be generating more profit. So the correction of this error causes an increase in the profit. So we're going to show in our form, which is a worksheet that we are presenting, the form we're presented with, that error number 2 will increase our profit by $454. Okay, so remember, once there is a reduction in your purchases, it means that your profits will increase. And we're going to look at the next correction. Now, the other correction is showing us that, based on what we would have indicated, that discount allowed is to increase by $60. Again, discount allowed is an expense. And if you increase the expense, it means that that's a debit entry. So this debit entry of $6 is showing us that the discount allowed, which is the expense, must increase. Once you increase your expense, remember, that causes a reduction in your profit. So to correct the error, we are going to show that the error number 3 should decrease our profit by $60. Let's get back to our response, the general journal, to see if there's anything else that will affect our profit. No, error number 4 that we have indicated that a debtor, the debtor account, which is Marvelyn Adams, should decrease. Now, when you're preparing your income statement, we do not use debtor to calculate profit. So it therefore means that this item will not have an effect on the profit. So in our response, all we're going to simply write for error number 4, no effect. Okay, let's move into error number 5. Error number 5 is drawings. Drawings affect capital, and therefore that is used in the balance sheet preparation. So again, drawings, error number 5, will not have an effect on the profits. So again, we're simply going to indicate no effect. Now, based on the form that we're presented with, we are required to enter the totals. So for the increase amount, we only have a value of $454. And for the decrease, we have the 76 that is coming from error number 1, indicating a decrease. And we also have $6 from error number 3, which is also indicating a reduction in the profit. With that said, we are going to add both to give us a total that we are going to enter in the decrease column, and that is 136. Now, the difference between the 136 and the 454, we are going to enter this in the section that states net difference amount, increase or decrease. And we're seeing that the increase is greater than the decrease. So it therefore means that we're going to have a net increase, and that value is the difference between the two figures, which is $318. Now, based on the form, again, we were presented with the profit that was generated before, and this profit is 17,800, which in the examiners entered that amount for you in the form. This 17,800 will increase by the net increase of $318. And that now give us a corrected profit of $18,118. So that takes us to the end of this section where we would have calculated the corrected profit. Remember, if the correction to the error does not affect your income statement, the profit, if it's not using your income statement, that then it will not affect your profit. So it therefore means that that would not have an effect on the profit. So you only use the items that you would have used in your income statement to calculate the profit. With that said, we can move into the last part of the question. And it reads, Easton Lie is considering using a control account for his ledger. Complete the table below by indicating the book of original entry and the effect of each item on the sales ledger control. Effect meaning whether you're going to debit or credit based on if there's an increase or decrease. And remember, the sales ledger control is also known as total debtors account, and it means that you're going to carry out the double entry concept where if there's an increase in debtor, you debit, which is an asset, and if there's a reduction, you credit. So bear that in mind for the effect on the sales ledger control column. And the first one was done for you as an example. Again, they're trying to make things easier for you, giving you an idea of what you're required to do. Bad debt written off, remember, that reduces debtor, and we use the general journal to write off bad debt. And in this case, because it reduces your debtor, the value of what your debtors are owing, then that's a credit entry. So the effect is that that's a credit entry. Now we're on to discount allowed. Now discount allowed is entered in your cash book. So discount allowed is entered in your cash book. So the book of original entry that is associated with that is the cash book. Now discount allowed, remember, it decreases your debtors, the value of what your debtors are owing, because you allow them that discount here, it's going to decrease the value that you're owing. And it therefore means that a reduction in the debtor, which is an asset, would give you a credit entry. So you decrease your asset by crediting. So the sales ledger control, remember, it's your total debtors account, and it carries the same concept. When you increase your debtor, you debit because it's an asset, and the credit is done if there is a reduction. Now let's move on to the last item, and that item is set off or contra entry. Remember, set off within the control system is a contra entry. It reduces both your debtors and your creditors, because remember, the same person who is a debtor to your business is also a creditor to your business. And set off basically you're squeezing out what is owing between the two. Set off is recorded in the general journal. So the book of original entry is the general journal. Now we are looking at the effect on the sales ledger control account. Once you have set up, both your purchases ledger control and your sales ledger control are affected. And remember, set off reduces the value that is owing. We're only looking at the sales ledger control. If you're reducing the sales ledger control, which is a debtor, which is an asset, is that a debit entry or a credit entry? This is a credit entry. We credit debtors, which is an asset, to show a reduction. And that takes care of the 4 marks right there. Let's move into the final section. And that is, state one reason why it is possible to have a credit balance brought down on receivable account. Receivable meaning or debtors. Debtors is from the family of assets. It's from that category of asset. And if it's from the category of asset, it means that the normal balance is a debit balance. But there are cases where the debtors account may carry a credit balance. But why? And here are some possible reasons. You're asked for one, but I'm going to give you 4. The first one, where a customer returns goods after paying for them in full. Another, where a customer makes advance payment or payments on his account, meaning they would have prepaid their account, so they pay before benefiting. Another is where a customer is overcharged. See, the customer is overcharged, that's going to result in a credit balance in their account. And the final one is where a customer overpays his account in error. And that would take care of the 20 marks for that question, which means that we would have completed all that is required for question 1 from the January 2024 Principles of Accounts paper. See you in another session where we'll continue working, where the focus will be on question 2.
Like, share, and don't forget to subscribe.